As Bitcoin surges forward at breakneck speed, it's getting a lot of attention. One thing anyone looking to get into it should be asking themselves is, what kind of risk does it represent in their portfolio? From short-term volatility to long-run prosperity or collapse, we're going to be covering it today. Let's get into it. Yesterday, we released a video discussing how Bitcoin could potentially get to $1 million. Hypothetically, if the US tried to use Bitcoin to back up the US dollar, similar to the idea of the gold standard the country was on before 1971, each Bitcoin would have to be valued over $1 million to account for all the dollars in the current money supply. It was a fun exercise, especially with a lot of finance people throwing out that $1 million per coin number in their commentary. But if you're seriously thinking about getting into Bitcoin, it is critical to understand the risk. It is extremely volatile, which affects short-term strategies. And in the long run, there is the potential to go to zero from a practical standpoint. Institutional and private support for Bitcoin has been increasing at an impressive pace. From Bank of New York Mellon, the nation's oldest bank, offering Bitcoin services, to Elon Musk's grand announcement of Tesla's $1.5 billion investment into Bitcoin, as well as opening up the possibility of accepting it as payment for Tesla goods and services.
This Bitcoin is my kind of asset, extremely volatile, and no one can really understand what's going on with it or what'll come next. That's why I'm thinking I gotta launch my own cryptocurrency. I call it Melontherium. Is it legal? I don't know. Doesn't matter. We're moving forward. So let me know in the comment section below who's ready for investing in Melontherium. And don't forget to like and subscribe to this video, share it with everyone, and let them know Melontherium is coming.
After these moves and others we've seen in the last few months, the legitimacy of Bitcoin is less of a question. It's no longer a joke. It's considered by many to be a serious asset. The real risk from a long-run perspective, in my opinion, is regulation. Bitcoin is something of a rebel in the financial world. No one controls it. It's like the Wild West of currency. But governments can create laws that govern how it can be legally used within their borders or the financial systems that they have influence over. We got a real taste of this risk to Bitcoin's longevity when U.S. Treasury Secretary Janet Yellen recently said that misuse of cryptocurrencies like Bitcoin is a growing problem, and that cryptocurrencies have been used to launder the profits of online drug traffickers and have been a tool to finance terrorism. Not long after these comments were made, Bitcoin dropped nearly 20% in a very short amount of time before rebounding again off of mostly Elon Musk's later comments. And it's not just in the US that we have to worry about regulatory issues. Even today, there's currently talk of India banning private cryptocurrencies like Bitcoin, and Hong Kong is considering a ban on crypto trading by retail investors. Now, if the US and other major economies were to effectively ban the usage of Bitcoin in their financial systems, Bitcoin's practical value to you in these places would be essentially zero. You couldn't use it. And what you have to ask yourself is whether or not you're willing to take that risk. There is potential for high return, as the Fed and other central banks around the world are printing currency to solve their economic problems. Assets like Bitcoin, gold, and silver have strong potential to become the prevalent currencies of the future. Gold and silver have a long history of being used as money for thousands of years. Bitcoin is the new kid on the block. Due to its volatility, short-term investing in Bitcoin is incredibly risky. 10 to 20% swings in a matter of days are not unheard of. It's pretty close to gambling if you're going to approach it that way. From a long run perspective, I don't see buying Bitcoin as gambling because there are some real fundamentals behind it. But you need to be okay losing everything in the long run if regulation on a practical basis drives the value to zero. If you are someone who has the money to put into Bitcoin and won't be devastated if you lose it all, it's definitely something that you might want to consider. For me personally, I do own some that I bought last year. Not much. For me, it was less of an investment as it was a hedge against inflation. I wanted a digital asset that was highly liquid that I could use in the event that inflation really took off. But it doesn't represent a large percentage of my overall investments, just a little bit, that if I did lose it, it wouldn't be the end of the world. But please keep in mind that I'm not a certified financial planner. This video is not financial advice, and you are responsible for your own financial decisions. This is just my opinion. One thing I've been wondering lately about Bitcoin, though, is why don't we know the actual identity of whoever it is that wrote the original computer code for it? I hope this episode has been useful. If so, please give it a thumbs up and subscribe to this channel to show your support. And please share this with anyone who's been asking if they should get into Bitcoin. If you didn't like this episode, go ahead and give it a thumbs down and let us know in the comments section below that a trained monkey could write cryptocurrency source code, and for all we know, based on the volatility of the asset, it could be someone in a watermelon hat. Either way, I'll see you in the next video.